A report by Financial Institutions Training Center in Nigeria has revealed that bank customers in Nigeria lost 472 million naira to fraud in the first quarter of 2023. It was also disclosed that there was a total of 12,553 cases of fraud recorded within this period. The data, however, showed a decline in losses compared to what was lost to fraudulent banking activities in quarter 4 2022. And according to FITC, a total of 3.18 billion naira was lost to fraudsters across banking platforms in quarter 4 2022, which meant that the losses declined by 85.13% in quarter 1 2023. The FITC data also revealed that there was a 79.44% decrease in the total amount involved in fraud cases in quarter 1 2023 compared to the previous quarter, with a decrease from 12.58 billion naira to about 2.59 billion naira. Now, the total number of fraud cases reported in quarter 1 2023 also declined by 14.07%. So, joining me for this conversation, I have Odeku, Seun, a partner, Forensic Services, KPMG Advisory Services, and is joining us from Victoria Island, Lagos. Thank you so much for joining us on the show.
Thank you for having me.
Now, despite the NIN, the BVN, bank withdrawal limits across various platforms, and other CBN policies, we still have this amount of money being lost in terms of fraud being perpetrated within the Nigeria's financial system in just about 3 months. So I'd like to find out from you, comparing what obtains in this year, quarter 1, as compared to what happened last year, which is quarter 4, how would you describe the situation? How would you say that the policies of the Nigerian government has been able to curb financial fraud within the Nigerian financial system?
Thank you very much. I think if you look at the trend over the last, I would say, 4 quarters, 4 to 5 quarters, that's the report by FITC, it appears as if there's a continuous decline in both in the number of attempted fraud cases as well as number of actual losses from those fraud cases. And you would also maybe see that indeed the fraud concentration is now based on mobile fraud as well as internet web-based fraud. So what that just says is that the traditional frauds in the banking environment is non-existent anymore. Where you have the forgeries, the check duplications, teller, those are on the decline, and you can see that a lot of that is now based on, a lot of the fraud is happening in environments that are in some ways external to the bank. And when you look at it, it also shows that, that means in spite of all the efforts that's been made in the banking environment, I think one key element, which is the human element, is still there. And then a lot more needs to be done to kind of address that element, which is in training people. Because most of those mobile fraud cases and web-based fraud cases are most likely fraud cases that have happened between fraudsters and customers directly, either by compromise of their passwords or their internet banking environment, or just through the simple way of maybe even through WhatsApp, allowing people to tell you that you need to make some payments to some other environment. So yes, indeed, it's been on decline, but again, the fraud has moved slightly to the tech side, and you can also see that maybe a number of the policies of the CBN has assisted with the decline in fraud. So typically when fraudsters get money in the banking system, there's always an attempt to convert it into cash. Now, with the restrictions around on cash withdrawals, as well as a number of ATM withdrawals that you can do, that you could see that clearly there is a tendency for people to just move towards other means as opposed to naturally withdrawing a lot of that through cash. So again, I think it's just important to note that the FITC report is a self-reporting, it's based on self-reports that are done by banks, and the risk that exists in that is that this report may not be accurate or complete because of a number of issues. It's possible that customers have actually experienced fraud and they've actually not informed the banks. It's also possible that banks may have experienced some frauds that they would, they may find it too sensitive to report because they don't want people to have a negative impression of the bank. So indeed, I would always take this self-report with a pinch of salt, so to say, because there's a risk that the actual numbers may be higher than that.
All right, now you're saying that financial fraud is almost non-existent within Nigeria's financial system. But then whether we're talking about 472 million naira or 472,000 naira, monies are being lost to customers of these different banks and financial platforms. And it's been pointed out that we have bank employees who are actually complicit and usually circumvent the various mechanisms and protocols that have been implemented by banks and, of course, by the CBN. So why is it that we have those certain elements within the financial system who have not really been apprehended, as the case may be? I'd like to know your take on that.
Okay, so the way I look at it is that there's clearly a lot more that the banks have they've come a long way in terms of the controls that they've implemented. I know that there was a time when banks used to just allow there was very limited maker checker controls, but you have a lot of that now. It's even tokenized where you have to have a token. It's not just two-factor authentication for bank staffs to carry out transactions, and all of that has reduced the opportunity. I think I'll call it the opportunity for bank staff to be involved in fraud, but it's still happening. And like every system, once there is a human element to it, the expectation is that there will be a few bad eggs that would still carry out a number of this fraud. But I think if you go through the report, what I would say is that even there are about 73, if I'm correct, 73 cases that involve that involve bank staff. That's about just less than. It's not. I don't think it's up to a percentage of the total attempted fraud. So, for me, I would say that it's still a key risk that we need to be mindful of. And when you look at the involvement, it's usually around theft of cash in the branch, teller theft, teller fraud, which is happening at the branch level. And those are the areas where you find that the bank staff are still actively involved. But as IT controls have improved, the opportunity for bank staff to be able to compromise the banking system is also declined significantly. And I think the numbers kind of show that when you look at the web-based fraud, I think there were about 3 staff involvement. And the mobile money, mobile frauds, there's no staff involvement. So yes, there is always going to be a risk when you have staff involved because of possible collusion among staff and even fraudsters. But I think the numbers in the report kind of show that it's not as material as other elements of fraud, which are the areas where I would say that focus needs to be placed, which is the mobile money and the web-based fraud, where sensitization needs to happen to people to know that these kind of transactions or emails that we get are not real. If I take myself as an example, I get almost on a daily basis, I get phishing emails, pretending to be either my service providers or my banks on a daily basis. It takes a very cautious mind not to succumb to some of those emails where you would just click on it and compromise your login details, and therefore the fraud will happen at that point.
All right, within the same period, 12,553 fraud cases were recorded. Now, looking at the issue and, of course, the indices in between, would you say that the frequency is as high as this when you look at other African countries or maybe in the West? And when monies like this are lost, how many of these cases are resolved successfully? How many of these customers are able to get their money back? And is it the banks that will have to pay for these losses when funds go missing?
All right. Thank you very much. So I think to answer the first one, if I look at the numbers and knowing the quantum of transactions that happen on a daily basis in the Nigerian financial space, I would say that for a quarter, if it's 12,000, then that's really, really low. The ACFE, Association of Certified Fraud Examiners, expect that on the average, a system would be subject to 5% of transactions in the system will be subject to fraud And I think that kind of cuts across, not just Nigeria, in so many other jurisdictions. So again, that's why I say the numbers are, there's really no way to kind of confirm the accuracy of the numbers. But if these numbers are indeed correct, then it's I would say that it's not material, because I know that some banks do as much as in terms of the quantum of transactions that they do on a daily basis. It's almost 100 million transactions on a daily basis. So if you look at it from that perspective, for just one bank, and you have about 25 institutions reporting to FITC, then it looks like a reasonable number. But a loss is still something that is very important, and we need to address it. Now, I think the second question is to whether the banks are going to be responsible for the loss. I think it depends on where the fraud happens, or how the fraud happens. So there are some frauds that happen, totally where the compromise happens. If it happens outside of the banking environment, where, for example, someone reaches out to a customer, the customer succumbs to the attempted fraud and compromises their login details, and as a result of that, the fraud incident has happened, then you may not be able to hold the bank responsible for that. But where the compromise is happening, the control gap is happening within the banking environment, then the bank is very much liable for that, and they will need to remediate or make sure that they at least return the funds to the customer. So, for example, you deposited your money at the teller now, and the teller has decided to maybe undercount and keep some of those funds to themselves, and that money is not reflecting in your account, then the bank at that point is responsible for that particular loss. I don't know if I've answered all the questions. I suspect I missed one of them. Don't mind.
Well, I think you've answered most of it anyways. But then does this now justify the earlier proposal by the Nigerian government that the Know Your Customer mechanism must be upgraded to include the provision of social media handles to monitor and, of course, NIP fraudulent activities?
Well, I don't, I believe that the CBN may have looked at the trend, and, at the end of the day, as investigators, I do investigations primarily every day. And one of the things we say is what we want as investigators is investigation. The more information you have, it helps you to be able to, get intelligence out of whatever investigation you're doing. So the more I know about someone, the more I can then say whether this person is capable of this. So I guess the attempt at, asking for social media handles is also to put more, there's what we call behavioral monitoring now, from a transaction monitoring perspective, which is if we know this person's pattern, then we can say that this person would behave in this way, and therefore, or if this person behaves in this way, then it's susceptible to fraud. So maybe a very practical example is I've read about people who, they look at your location on your phone. In some banks in America look at your location on your phone. You travel to Mexico, you come back to America, and then you start making large cash deposits. Then, that's a behavioral event that suggests that you're involved in drugs. And so I guess that's probably where the CBN is looking at, try and get as much information as possible on customers, so that they can feed that into the existing transaction monitoring system, and that can help predict, those the bad eggs in the society, and also reduce money laundering as well as fraud in this instance. So, but again, KYC for me, the underlying thing around KYC is, which is where we still need to do some work in Nigeria, is can I tell that this person is this they say they are, and can I find them when I need to find them? I think if we're able to address those two key issues, I believe that the fraud numbers will drop significantly, because for most of these fraud cases now, when you do the investigations, if it's an electronic transfer, you're able to follow the money until the point where that money leaves the system. But at that point, you should be able to say that this is the channel that the money has left the system through, and you should be able to identify an individual or a corporate attached to that channel, which should help you, recover or identify those responsible for that particular fraud. So once the KYC is not adequate, I think more often than not, you lose that trail where you get to a point where you can't identify the person who is attached to an account. So I think that's one area that we still need to work on, making sure that KYC is up to date across the bank. And also it's a macro issue. As a country, we still need to work on having a proper identification system that is dynamic, not just static. Today, there's address verification, but a lot of people have actually left the addresses that they've given to the banks. They're no longer living there. How do we ensure that as people move address and locations or change jobs, that data follows them along, and the banks are able to have that dynamic data so that it's easy to quickly identify fraudsters and bring them to books.
All right, so let's look at the conduits through which these monies are being stolen. Earlier on, you talked about the computer, you talked about the web, you talked about the point of sales, and even mobile money transfer. So I'd like to find out that why is it that these platforms seem to be the go-to platforms that these fraudsters make do with when they're all about stealing people's monies? And would you say that mostly monies are being stolen through wire transfers, probably account hacks, and probably the other methods by which these fraudsters use to actually steal people's funds?
Okay, so I think based on my, the data doesn't really specify, but I think based on my industry, my knowledge in the industry and some of the work that we've done, typically we've seen that there's a preference for mobile wallets because people can move money quicker through that. And then there's a lot more, activities that can be done. Things like buying credit, cash for credit. You could see that a lot of that would happen where people just, they're able to quickly buy credit or do, withdrawals at all those POSs and agents. So that's why you see that those are the areas where, as you increasingly go out of the ecosystem of the banking environment, as you go further outside the ecosystem, you see that it becomes more susceptible as a conduit for moving out fraudulent funds. So I think more control needs to be put in place. Again, when you look at the data sets, there's the BVN in the banking industry, but there's the NIN in the mobile services industry. So those two things, there has to be the systems have to bring those two data points together so that there is consistency in data across board, and people can then take advantage, the investigators can take advantage of that to identify the fraudsters.
So now that you've mentioned the fact that there's the need for an upgrade in systems, the monitoring of monies, as it were, transactions, as it were. Now, how do you think that these financial institutions can incorporate technology into their systems to ensure that they are able to optimize security measures on their platforms and ensure that their platforms are fraud-free?
So I think if you look at, there are quite a number of technologies out there. There's a fraud monitoring system. Most of the banks have a fraud monitoring system, and it started from Excel-based, just manual checks by the banks, but you can see that a lot of banks are now transitioning to what we call the fraud monitoring systems that have AI capabilities, machine learning capabilities, and all of those are inline. They are inline in the sense that as the transaction is happening, they should be able to take that transaction, build a behavioral pattern, and also just either stop that transaction or flag that transaction to the relevant people to review. So I think it's a continuous process where banks have to take learnings from some of these successful frauds and see how they can build models. They can take it back to the systems, build models that will then identify and stop the systems. But like I mentioned earlier, a lot of the fraud, from what I can see in the data, is actually happening at the point where people have compromised their own systems, and it will be difficult for any transaction monitoring system to in some way identify that, because it will appear as a normal transaction in this case. So say, for example, someone close to you knows your password, is able to do transactions as you would normally do. The system will pass those transactions, but then it will still be recorded as a fraud. So for me, on the banking side, yes, we can do more with by improving the technology to better identify these frauds. But there's a lot more that needs to be done on the educational side, informing people of the risk of compromise. You'll be surprised at how often it is that people share their password and PIN, especially at people who are not so literate. They still give their ATM cards to someone, say, go and withdraw this amount of money for me, or go and do those transactions for me. All those compromise points, there needs to be more education on those so that the numbers just drop as a whole from all angles.
Definitely, education is key. And even as we see that financial institutions and banks are trying as much as possible to build firewalls around their platforms to ensure that people's monies are secured. These people too, it will be nice for them to be wary of every single transaction that they get to append their probably their data to, or maybe their keys or their pins to. And every link, it's not every link that you see on your phone or on your platform that you just go ahead and click, because that might just be one way by which you let out your details and your information. And we hope that people will be able to take these advice that you have given seriously. Thank you so much, Odeku, Partner Forensic Services, KPMG Advisory Services, for joining us on the show.
Thank you for having me.